Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday, so you're going to get your weekly Manhattan market update, Johnny. A very important one today. Let's go to the basics before we get into the weeds. I'm looking at supply, full supply, not just actively updated. This is now everything. 7,072. Show me that chart.
Yeah, and again, this is an overall look. It's everything, and it is continuing its slow march down. That started early July, and here we are, another week down 3% lower. It's slow, but it's steady as supply dwindles during the summer.
Yeah, inventory is declining. All right, that's the only way of looking at it. I mean, if I'm a buyer out there, I mean, I was kind of hoping for the other way. I was hoping to see inventory rise during this little shift, but we are in a market right now that is seeing declining supply. It is what it is. Let's move over to pending sales. The measure of demand, Johnny, 3,908. That looks like it's declining as well. Show me that chart.
It is declining as well, Noah. And it's one of the things we've been tracking in the last few weeks because it was interestingly had been ticking up a couple weeks in a row. And I think it looks like the volume of contract signs for the summer finally caught up to it, and it's kind of ticking back down here. So I guess the overall measure of everything that's in contract signed right now is down 3% for Manhattan.
Yeah, and I would think the general bias pressure towards this is going to be down, right? Because I mean, deal volume has shifted from a quite high level, which we'll get to very soon, to a different, more normalized level. And we're not. I mean, you're not going to maintain pending sales in the fours unless you have a lot of contracts being signed in the front end of the pipe, and that's just not happening. And I just want to point out right now, I've got a market pulse of 0.55. Okay, that is a ratio of pending sales to supply, and of course that dropped because this supply number now includes all of that supply. So that was the reason there. And I want to go to this, right? The trend is the same. The trend is the same. I just want to show everybody what this trend is looking like. And when I take a look at this, right, Johnny, something pops out at me that made me want to look at the data in a different way. And we did that today, and we're going to get there, is look at this right here. And that moment in time was like 4 weeks ago or so. Did we kind of overshoot this downside, and are we bouncing? I don't know. Let's just stop right here. Let's go to the weeklies, see if we can dissect anything, and then we'll come to a conclusion. I'm looking at supply, John. 1 week, 219 things, down 8%. Show me that chart.
Yeah, and this is, we're getting into some of the lowest numbers for weekly supply we've seen all year long. We're lower than we were 21. We're lower than we were 20. So we're basically on par with what's more or less normal that we saw back in 2019. But 219, that's down 8% from last week. It's not a lot of stuff hitting the market these days.
Yeah, not a lot of stuff hitting the market. And you have a lot of stuff going off market. And when I look at contract signed, we love our contract signed. The 1 week pace, that is ticking down just a little bit, 187. That was higher. Johnny, show me that chart.
It was higher, no. So we're down 6.5% from the week before, 200. So it's only a difference of 13 contracts. It sounds a little bit more scary when you put it in percentage terms. But I think what's interesting to note here is if you look at this chart, you can clearly see that, so far 2022 is remaining right around the level of 2019. So we're really right back to seasonal averages here. And, if you're looking at that 2019 line, you're kind of getting an idea of where we're going. You're not really ticking up here. We got another few weeks of August, and those are the hot, sticky months in which people are generally not in the city. So I don't expect a meaningful tick up in weekly contract signs really until folks get back, and that's September, October. So it's going to be a bit, if history's a guide, we might have some slow weeks ahead here.
Yeah, right. August and September are our slow times. And you know what, Johnny? If I go to 1 month on this ticker, 901.
Yeah.
901. Now the weeklies are telling me that's a little bit pressure to the downside, so that's probably going to fall in the coming days. But I will tell you, I look at this every single day. That was in the mid to high 700s. Okay, mid to high 700s about a month ago. And we have been steadily ticking higher in terms of deal volume. And I want to bring this point up because I want to visually show you what I'm talking about. This is weekly contract signed, right? And what it's showing you is that drop right over here. You can see we dropped down to 164 in July. Again, about 3-4 weeks ago was when I think we hit the peak fear level of this wave down. I want to call it a wave down because nothing goes in a straight line forever. Cycles go up and down. We have waves, right? I think that whatever this shift was, whatever it was from the previous peak that we just hit, is done. And my logic behind this is I'm seeing a bounce up in contract activity, and it's now been 3 consecutive weeks. Look at the contract activity for the last 3 weeks up, right? I mean, what do you see when you look at this chart, John?
Yeah, I tend to agree with you. I think the market fell pretty fast, and I think, you know, if flash back to June, July, I mean, there was a lot of concern about, oh my God, the market's crashing. It's completely stopped. No one's visiting my listings, and you can clearly see this in the contract sign. Yeah, we did kind of stop, but we didn't stop completely. I mean, if you just draw a line from that right part of the chart all the way to the left part, I mean, you'll see that we're pretty much right back to where we were in July. But I like your point, Noah, that you're right. I think we fell a little bit too far, a little bit too fast. And I think that was a tiny sliver of opportunity for the buyers. The question is, you know, with supply not rising, right? Sellers are not freaking out. Sellers are sort of, you know, they're actually coming off market. So buyers, right, their supply pool is actually constrained because you have less supply coming on. And that, I don't know if you remember, that off market numbers up like 38% in the weekly trend. So
Yes.
If you're a buyer, I mean, yeah, you had a little bit of window opportunity, but it seems like that might be over right now. It's going to be an interesting next few weeks, I think.
I think the window of opportunity, if you look at it on a really granular level, was probably widest open about 3-4 weeks ago. Now that I'm looking at the data, and we say, like, that's the point. We're not actively falling in terms of liquidity. That's the key point. We were actively falling from this point, from May all the way down, but now we're bouncing up. And if I could just overlay what's in my head to explain it to you guys in messaging, like, let's draw zones. Let's draw zones out for, like, what is considered a hot zone, what is considered not a hot zone. And you could see, like, first off, look at how crazy last summer was. Okay. Look at where we were at the peak in April, right? February, March, April, right around there. We were in that red zone. And then we dropped all the way down to this point right here, which was that 4 weeks ago. We overshot just a little bit in terms of how slow liquidity and deals went. And now we're bouncing back up, and we're kind of in that neutral zone. As you were saying, we're kind of back in that neutral range out of zone 2, which is saying, if I'm a buyer out there, you know what? The market's not actively falling. There's no active panic. There's no fear. I don't see it, because otherwise you would see deal volume going the other way. And it's a very interesting way of looking at it.
Yeah, and I agree. And the other thing is, if you draw that line, go back to your zones. I like these zones a lot. If you go back on that far left, you'll see in 2019, right? Yeah. Early September, late August, they're getting into zone 1. So, yeah, you know, like I said, so if you're looking at history as a guide, you can't really look at 20 because COVID. You can't look at 21 because post-COVID. Yeah. You really have to go back to 2019. I think that's the last good year we have to use as any kind of a guide. And what that's suggesting is, yeah, there might be a little bit of a wiggle room down here, but it's going to pop back up. And we're beginning in zone 2 now. We're going to be in that for a bit of a while. We might see some zone 3 action. But more or less, we're in a normal market. No, I mean, the normal market for the summer.
Yeah, and I think buyers need to understand that again, I actively falling. I do not think this market is actively falling. I think it's found where it needs to be. Yeah, the rental market doing its thing is helping secure wherever the sales market has come down to figure down 5%, 6%. I don't know what that is. We have to wait for more time. But as far as liquidity coming back to the market, keep an eye on this ticker, Johnny. Keep an eye on that 901 number right over there, because if that goes up or down, if that maintains its level, we're okay. If that has another wave down, we're going to have another conversation. And that's my point. Okay.
And I think the last takeaway I would have here is, we talked about sort of an opportunity for the buyers, but I just like to talk about sellers for a second. And that's, we're talking about a normal summer market, and it doesn't necessarily mean you got to cut your price like crazy to get a deal done, but you have to be priced at market. And where is market right now? It's a little trickier to figure out because there's less buyers. So, the fact that deal volume has ticked up off the lows is a good thing for sellers. It's not, you're not alone here. There are buyers out there. You just have to be patient because it's summer. Just don't forget that.
Yeah. You're going to have to find the market. It's a little harder to find the market during this time.
Yeah.
Johnny, thank you for pulling up all those charts. This data is very, very, very interesting to see when you put it into a visualization. I am Noah Rosenblatt. We're both from UrbanDigs. Don't forget, if you guys got questions, we got answers. We have our forum right down over here. If you want any of the charts that Johnny made today, it's going to be in our premium section right over here. If you've never tried UrbanDigs before, give it a try. 2-week trial for new accounts. Other than that, this has been your weekly Manhattan market update. Catch you next time.